Welcome to another day in the Matrix, waters above crypto, sending you all love and high vibrations, wishing you all a beautiful start to your week. We're getting some bullish price action in the crypto market to start out our trading week, and this will also be the last week of trading in 2021. I know everyone is wondering what's going on regarding this bull run, so in today's video I'm going to start out with a quick Gematria decode and then move into the charts of Bitcoin, Ethereum, and XRP to share my short-term sentiment on what we can expect to happen next as we transition into the new year. Also, I'm currently running a sale on both of my courses until New Year's Day, so if you're interested, stick around through the intro and I'll share that information in a moment. And if you're new here, we do cryptocurrency technical analysis and combine it with Gematria Numerology and Astrology to understand these markets. Feel free to subscribe and turn on the bell notification to stay updated on when new videos come out, and make sure to give this video a like and share this channel with other conscious beings to help grow this community. And as you heard earlier, I'm currently running a holiday sale on both of my courses, the Mastermind course, which is my beginner level course, beginner/intermediate, and then I have my advanced trading course, which is for more advanced students. So for those of you who want to learn how to do technical analysis and combine it with Gematria, there will be a link in the description box of this video and also in the pinned comment below to my website, watersabovecrypto.com/redpill2021, and that link will already have the discount automatically added to it, so there's no promo code needed at checkout. All you'll need is the link and you'll be able to get my courses with the holiday discount included. And as I said, the sale will be live until New Year's Day, about 24 hours within January 1st. So with that being said, let's take the red pill. So over this past weekend, I actually gave a little bit of a shout out to this day of December 27th, really kind of direction neutral. Wasn't really anticipating it to go any particular way just because of this market being extremely oversold since the dump that we had earlier in December. But let me just recap that. So today will be 111 days since the start of Rosh Hashanah. Everyone who's been following my channel for quite some time now, you're aware that I've been using this date of Rosh Hashanah, the Hebrew New Year, as a pivot point for all my other dates that I've been decoding. And over the holidays, probably on Christmas Eve, I actually made a Patreon video for my Patreon supporters, and that video was discussing that this date could play a key role because of other dates that I've mentioned in the past. And again, this isn't anything that I've done. This is just what the market has given us. So let me show you this play by play. So we have some lows on the, well, first let me start from the pivot point, which would be September 7th. And then we have lows going back before the breakout, 33 days before Rosh Hashanah. You can see that right there on August 5th. And then if I go over, we can see the macro lows in the cycle were actually here 77 days before the start of Rosh Hashanah, and that would be on the 22nd of June. Then if I go back all the way to the crash date, which happened on May 19th, that big correction, 111 days. And then we could do this pretty much moving forward as well. So going forward, we have September 29th, which we can see was 22 days, and then that led to a big breakout. Then we also have the October 21st peak, about 44 days after, and then we have the December 4th correction, 88 days after, and then today would be 111 days. So we can notice that it's not every master number that we have a big move. So we didn't need to do anything specific on this date. We didn't have to make any significant moves. It was just a pattern that I located months ago. I believe I've shared this 77 connection and the 111 days connection. I've been sharing that for quite a while. Before we even had Rosh Hashanah, I've been exposing that. So it's just a pattern that I've located a while ago, and I'm keeping an eye on it as one of the tools for how many big volatile days we could have. And it seems as if that Rosh Hashanah plays a very important role in all of that. So again, it has not only been the way that I've been decoding from one day to the next, but it's also these master numbers are seemingly playing a big role. So it's great to see that we're not getting any huge dump today. I love the market is starting to sort of recover, and that's a good sign. And we're definitely starting to see Bitcoin dominance get a little bit shaky, and that's also a good thing because a lot of these altcoins were extremely oversold since the dump, and this sort of relief that we get for the altcoins with Bitcoin staying slightly bullish but mostly sideways is a very good thing for altcoin holders. So I know a majority of people who follow my work are heavy altcoin holders, and this market is sort of giving us that price action that we could be happy for as altcoin holders. Again, when Bitcoin makes very volatile moves, it will drag the altcoins down in a majority of scenarios. Of course, there's outliers, and those outliers are it is what it is. If you're invested in them, that's great. But for the most part, a majority of the coins move when Bitcoin moves in that exact direction that Bitcoin moves in. So this is why I cover it in my analysis daily. And it's been pretty noticeable now that we could use the Bitcoin chart and the Bitcoin price action as a key component in our analysis, because not only is it the energy of the market, but it has the most chart history. So for somebody who's a technical analyst, it's really nice to be able to have this much data to work with, as opposed to some altcoins, they only have a couple months of chart data. It's not really that helpful. So anyways, let's talk about a couple other days. So tomorrow, if you go from the last day of Rosh Hashanah over to tomorrow, that of course will also be 111 days. But another thing that's important is the last day of Hanukkah being December 6th. If we go over from December 6th, and I show you that here, you're going to see that tomorrow is actually 22 days since the last day of Rosh Hashanah. And this 22 number is very important because we're moving into the year of 2022. And then we know the Hebrew year we are in right now, since Rosh Hashanah, gets reduced down to 22. So we are 22 days tomorrow since the end of Hanukkah. So that's pretty important, and because we have that 111, that could be something to take into consideration. Also, one other thing is the date numerology is the 18. If you have standard date numerology, you could see that right here, 18, and that number is very important in Judaism. I've showed that many times in my work. Another thing is the date numerology, the way that I like to do it with double digits, added up as double digits, you get to that 81, and that 8118 is a mirror, or as above, so below. It's pretty important stuff. So this could be something to consider for tomorrow, having potential energy when you're considering Rosh Hashanah compared to tomorrow as 111 days. Then you have this connection between the end of Hanukkah and tomorrow being 22 days, that master number, and we're moving into that year of 2022 again with the Hebrew year reduced down to 22. Another thing is, from this May 19th correction, the big flash crash that we had, over to tomorrow, gives us 223 days, and that's the inverse of the skull and bones, 322. The mirror is the 223. So of course, from the crash date over to today is 222 days. That was another piece of significance that I shared over on my Patreon decode. But again, we're seemingly chill right now. There's been very low volume, no huge moves, and that's a good thing. It's good that the market is sideways. I exposed that over my last Red Pill episode that I did for Patreon. And I also exposed that in my last YouTube video, how for me as an analyst of this market, I would rather boring sideways price action for Bitcoin over the month of January. The reason is because we've been chopping around so much over the past year, and we're seeing that there has yet to be a dramatic pulse for these altcoins. Of course, there's outliers. And because of the NFT craze, we have that going on. Because of Metaverse, we have that going on. There's a lot of buildup now, but the overall altcoin market is down. And with this being down, while Bitcoin dominance is also approaching that 39% level, this is sort of indicating a sign that we need to get ready for a big volatile move in the market. So that's why I'm preparing everyone mentally for that. But also the reason my sentiment for Bitcoin would be preferred to have some sideways price action. Because when we have these huge dumps followed by big shakeout bull traps followed by larger dumps, this is not a healthy market. And you're seeing that these market makers are playing with the average person through this sentiment, bringing in extreme greed, extreme fear, and it's back and forth, back and forth. It's endless. And there's yet to be that boring lull stage in the market. Here it was slightly boring, but I do remember every time we had these bigger corrections, which you can see these wicks. We have one wick, another, two right here with new lows, and then another downtrend into lows. During this whole stage, stage, it got people extremely bearish. Extremely bearish. So it wasn't boredom. It was just negativity. Now, I would love some boredom, personally. I know people like don't want to hear that, but boredom in Bitcoin does not mean boredom in the altcoins. Remember what I just said. So anyways, let's continue that connection of from the day of the 19th over to tomorrow, giving us 223, the mirror of 322 coming back to Skull and Bones. And then also we have the following date of this being this 30th date. And that could be significant because the 30th is 3 months and 22 days since, the 29th would be 3 months and 22 days since the start of Rosh Hashanah, which was the start of Shemitah. Again, the 322 coming back to Skull and Bones, 322. And if you don't know who these guys are, it's a secret society out of Yale. Both President Bushes were a part of it. There's a bunch of other presidents that were a part of this. It's essentially a secret society that is ran by the New World Order. So anyways, go research that. Now, with this other connection here of this date, we have that 19. We know that 19 on the date numerology, the 19 numbers coming back to Ra, but it's also coming back to the current psyop that has controlled the whole world, the C word. So anything with the 19, I'm definitely paying attention to. Let's see if there's anything else I could think of. So we do have on the 30th, it is the 83 date numerology, and the 83 is the 23rd prime number. The 23 comes back to Bitcoin and Chaldean, the most pure cipher. And also this date has a standard date numerology of 11. Leaving 1 day left in the year. So that's the 111. So standard date numerology, 11, master number. And then we have that last day, leaving 1 day left in the year. So that 111 is definitely important. Spicy week ahead, everyone. Again, I am sort of more in the camp of bullish momentum moving into this new moon. We have a new moon on the 2nd of January. That's always my sentiment typically. We've learned that these eclipses play a huge role in energy of this market. So we don't have any eclipses up until, I believe, April 30th. So we have quite a while now with no eclipses. And this could be a good sign, telling us that the market has some time to stabilize. And then we could actually push up slightly bullish into the first quarter of the year. And historically, we've seen that all the time. Sans the crypto market, when we're looking at the global markets, the month of January and a majority of February tend to be bullish. We've yet to have huge market crashes in early February or in the month of January. They're very rare to have huge corrections in those 2 months. Now, we have seen in recent history huge volatile moves at the end of February as we transition into March, but the real bloodbath is like mid-March. Now, with this being said, does that mean we're in the clear until late February? Perhaps. Does that mean we're in the clear until the next eclipse? Perhaps. We need to do our work as decoders and analysts to be able to get, a better read of what's going on there. But for me, given that this bull run is where it's at right now, where we've had a bigger correction and higher lows and we're holding the macro structure, we're still in a bull run. So until Bitcoin closes a weekly below 40K, there's nothing to complain about here. This is fine. This is par for the course. It was a huge manipulation bull trap followed by a correction. But ultimately, if you just disregard this big wick and you just look at this on an area chart, this is fine. We have lows, higher lows, higher lows. And then once we get above these Rosh Hashanah highs with daily closes, we're pretty much in the clear. Now, we do have a bull trap scenario for Bitcoin, but this could bring a lot of gains to the altcoins. So a majority of people who are following my work, and myself included, like I hold a lot of Bitcoin, but my whole position is very altcoin heavy as well. So with all things considered, this is great. If this Bitcoin price wanted to just turn around right now, that would be the end. But if Bitcoin maintains this structure, and even if it was to come down to 48, 47, build a little bit of a base, and then continue slanting to the upside, sloping up in bullish posture, that's good. That's completely fine. So I'm just starting out this video right now with the very basics to get people calm. Be calm right now, because I know there's a lot of things coming from the left and the right from everyone. But if you just zoom out and you pay attention to what's going on, you go to the 12-month candles, for instance, which I talked about in my last Red Pill episode. This is continuation, guys. This is continuation. That's last year. This is this year. That's good, okay? We don't have this going on. So I'm just letting you know this because it's important that we don't get lost in the smaller time frames and start to, make our investment thesis get all over become chaotic. Keep it chill, keep it calm, focus on what matters. So let's continue this with this falling wedge chart. This is something that I've been wanting to talk about. We were discussing this back, I believe, earlier last month, probably in the beginning of December. We were discussing it slightly with this last retest. And then we can see these three falling wedges, with the most recent one having a breakdown. Since the breakdown, we've had a kickback. This kickback has actually broken through the resistance trend line of this falling wedge. So you can see that this is the resistance line. Once we break through it, we do typically move up. And then once we get around to the top of this channel, we were correcting down. So I know we're outside of this parallel channel. I'll bring it up in a second, but this is something to consider. Now, we have a break of the resistance. And then on top of this, we have a couple other things to show. So for one, we know when we break through the top of the resistance right here, followed by a MACD bullish cross, we tend to move up. Here, we broke through, MACD bullish cross right there, we moved up. Here, we've broken through, we've had a MACD bullish cross, and we will remain above it as long as we continue above 48,500. So looking good. Now, another thing we have is the RSI. So the RSI, once we break through, after we retest around 30 RSI, we tend to move up into that 75 to 80 range. So right now we're sitting around 50. So this is one thing to consider. So let me repeat this. We have a breakout of the top side of this resistance. Then we have MACD bullish cross, and this is all after typically we backtest the low 30s on RSI. Then after that, we anticipate a move into the 75 to 80 RSI range. So we've had this happen, and now we could be potentially repeating this structure again. We've seen our RSI got even lower. It actually broke the trend, and that was just because of this massive liquidation event. If we didn't have so much leverage in the market, we would probably just be sitting around 33 RSI on this recent iteration as well. Now, we've had a break above the topside resistance, we've gotten a MACD bullish cross, and now we're approaching into these, into this plus 50 level, and above 50 is when we're bullish, and we could anticipate, at least because of prior iterations, that we could be moving up into the 75 and 80. Now, the speed at which Bitcoin does this move is where it gets a little bit worrying, right? Because the quicker we move up bullish, the quicker this RSI is going to rise, and then that's typically not a good thing. Again, I would love sideways price action personally. I know the market doesn't give me what I want, but as an analyst, I would really like this market to calm the hell down for a moment. It's just too much. It's too dramatic. And the reason it's so dramatic is because of over-leveraged, unsophisticated investors, and the whales are just gobbling up all their coins. It's happening time and time again. So with that being said, could we anticipate a move up into 75, 80 RSI? We should, based off of prior iterations. Is that something we're just going to take 100% without considering downside? Absolutely not. We have to be aware of all things considered. But let me add a little more to why it should be upside before huge downside. Or not huge downside, but let's just say upside is more likely, even if we do get a short-term pullback. Okay? So let me lay this down. We have this downside support level, which we can see has played a support. Even before the bigger correction, it was a support as well. Then we came up into this line as a rejection, and then we definitely had a downtrend. Now, this, since we've broken out, we've actually gotten above this support line and backtested it. And as we're backtesting it, what we look for is a continuation candle. So right now, we could be getting a continuation candle. And if I turn off all my drawings and I turn on the indicators, we can see clear as day, we've had about 5 candles above the 21 exponential, and it's that 34 exponential moving average on the daily that's showing us some resistance. So a daily close above that 34 should signal to us to get ready for momentum to the upside, and that would be a swipe up to the 55 simple moving average right here. We can anticipate that would be the next level for Bitcoin to have some resistance. Ironically, it's at 55K. So the 55 simple moving average is at $55,000. Again, Satoshi Nakamoto equals 55. in Chaldean. So it would be hilarious for Bitcoin to end the year at 55,000. If Bitcoin ends this year at 55K, it is like undeniable. Gematria is just the most powerful tool we could possibly have. Remember, this year, past year, was the 45th birthday of Satoshi. So that was, again, it's all, let's look that up really quickly. I know I'm in the middle of a video, but I just want to, because we're in the 46th year of Satoshi. Of course it's 1111. When I looked that up. So he turned 46 after April 5th. So his birthday was the 4-5 date numerology, and he was 45 before turning 46. So this is classic how this all worked. And then I remember around his birthday it was 45K Bitcoin. Or it was 54K Bitcoin, excuse me. So it was all by the numbers. So it'd be hilarious for Bitcoin to have a yearly close at 55K to end off, or 54K even, just to end off and be totally by the numbers. Because, of course, we have that 55, but then in Bitcoin we have that 45. As above, so below, 54. Gotta love it. So anyways, in the short term, daily closes above that 34 exponential moving average would be extremely bullish for a swipe up to 55K. In the event of that, I do expect a little short-term resistance, but in the meantime, while that's all going on, we're going to have this 8 simple moving average, which is this yellow. It's going to start swiping above and crossing all of these key moving averages. So what we really want to see, though, is this 13 EMA, this blue line, crossing above the 21, and then eventually crossing above that 34. That would put us into bullish posture. So you see it's red, orange, blue. When we're bullish, it is in reverse. It is the blue on the top, orange, red. So around the time that those all cross into bullish posture is when we get our big moves. You can see it back here too. You see that cross? Even though we back tested the 13, we still went on for continuation. So from the cross date all the way up to when it stalled out, it was 42% gains. Right here, from the cross date to where it stalled out, 40% gains. So we can couple that with my analysis that I gave you of how this RSI likes to work at around those levels. So here it was around 75, and here it was slightly above 75, but still around a 40% gain. Off of the cross, by the way. Like, we're not even talking about, all things considered, like buying at the wick lows, which obviously is a little bit more difficult. But here, from the cross on all these EMAs, this thing went up for a while before it stopped. We're talking about 289%. So this EMA band that I've selected, again, I like it because it is using a little bit more of a conservative approach on a daily chart, but for the most part, it works pretty damn well. So assuming we had the cross, let's just say at like 53, 54K, we could anticipate still a 40% move off of the average iteration of it. And that's putting us into the mid 70s. So if that was to happen, it would be great after more sideways. The more sideways and up we are, the more these EMAs coil together, and that typically leads to a eventual resolution to the upside. Now, what else do we have going on here? We discussed that. Okay, let me see. All right, so I believe we have a lot of evidence as to how these falling wedges play out in the past. One of the questions is this prior support going to be flipped as resistance? That's something that a couple of people might be having as analysts, because we can see that this first falling wedge came down from the top to the bottom, bounced off the bottom, came up to the top, rejected, came down to the bottom. This is when we started to consider this parallel channel. Then we came up to the top. Now it is confirmed because we have a macro trend here. After this rejection and then breaking down through the structure, we have gotten out of it, and now we need to ask, is this prior support of the parallel channel a potential resistance? Now, the issue with this is because of the steepness of this parallel channel. The top of this is at like the high 60s. So that would essentially be backtesting prior all-time highs. So I wouldn't consider that as part of this analysis, but I'm just going to leave this parallel channel on this chart because it doesn't hurt. But let's pull some fibs and see if we can get any more information in regards to this. So I'm going to go from the 69K top down to the swing low right here. And what we're going to see is right now we've actually gotten above the 236, and we have started to hold that level between the 382, 286. If we're getting above that 382 level, again, the 0.5 fib is at 55K, which is exactly where the 55 simple moving average is. Is that by mistake, guys? I don't know. So again, that 0.5 fib would be the area we would look for a dead cat bounce for Bitcoin to get rejected there and then come back down to the lows. And the golden pocket in general is typically the area that we anticipate for cryptocurrency to play around in after larger moves from swing highs to swing lows. That level being closures over on the daily, anything above the 786, we would anticipate continuation. So if this is going to remain bullish, I mean, we're talking about a new all-time high just at the resistance line by the 16th or 14th of January. I'm not saying that's what will happen, but if we're going to consider that as part of our analysis, that is something. And that would be really bad, by the way, if we got rejected here around next month, because that would be a double top. You don't want that. So that's why I'm saying I would rather Bitcoin be sideways, because it needs to be sideways and just blast up to the upside to have that blow off top that we've been anticipating. Now, could Bitcoin just go straight up into February and have a huge correction down? Absolutely. But I'm not there yet. For right now, I'm playing it one thing at a time. And until we get over 55K, it's just more base being filled at the bottom. And then the downside target would be this 236, somewhere around 48,860, which would be in alignment with this prior resistance line. So we broke through the resistance. If we're going to back test it, that would be the area. Now, because we have this new moon showing up very soon on the 2nd, I don't know if we're going to back test it. We're looking pretty good right now. So based off of how Bitcoin likes to behave, more likely we go up to the 55 to 60K range than we break down lower than 45. That's just how this is looking from a technical perspective and kind of where I'm leaning on right now. So I'm just letting everyone know that. That is more what's likely to happen. Move into 55 to 60, more probable than moving down below 45. So let's move on to Ethereum. So many charts. Okay. Beautiful. So I'm going to turn off all of this for now. Remember, we discussed this in the last video. We have this trend line, which was back tested back around early to mid-December. It has bounced since, and we are still having a struggle at the 888 fib. Recovering over that 888 fib would be great, but really the price level to get above is right here, around 4,500. So let's turn on some EMAs and see what's going on. You can see that the 3 key EMAs are in a bearish posture. The 34 is above the 21, above the 13, and they are squeezing the price. You can see it's literally squeezing between these candle closes ever since it got above the 13, pretty much squeezing there. And that's a good thing. Sideways is good. I like sideways. It's important. Gives us some time to build a base structure and confirm higher lows. We want that because we have here our low, here our higher low, and here an obvious higher low. But we can't confirm a higher low until we start to break a bullish reversal. And that would be at least getting above 4,500 in my opinion. So we can see the daily RSI is essentially right around 50. It's at 49.8. We can see that the MACD is bullish. Let's look at our weekly close just to see how everything went. I'm going to turn off the drawings. And we're looking amazing. So you can see multiple back tests of the 21 exponential, and then we got our close last week, which was yesterday night, above the 13. So that's perfectly normal. We can see back here for ETH, it likes to hold that 34 if things get really bloody. But right now the 34 is still sitting at 3,300, which is above the lows that we got in September. So that would still be a higher low if we were to see a bigger correction. Now, typically once ETH gets tested the 21, then gets back above the 34, or sorry, back above the 13 moving average, it tends to be bullish from there. So I suspect we're most likely going to be holding this blue trend line, the blue moving average, which is the 13 exponential on the weekly chart. We're most likely going to be holding that level from now on. So of course we would like bullish continuation, which would be, in my opinion, just getting above that 4,500 level. That would show us some good signs, but of course we always have a bull trap. And the bull trap scenario is not fun, but it is a reality. So let me show you what that would be. I'm going to go from the swing high down to the swing low, which was right there. And that puts us somewhere around that level that I was just exposing to you, somewhere around 4,500. So getting back above there would show signs of a short-term trend reversal, but for continuation, you would want to have daily closes above 4,600. It's $100 more. And that would really signal that, okay, we're ready to make some moves. If we come back up to those areas and we stall out, again, pretty much like a double top, and that would not be good. And that would also be in alignment with some sort of bullish move for Bitcoin into like the 59, 60K target, because Bitcoin to move up to there would easily give some relief for ETH. And if dominance for Bitcoin starts to just completely reverse and go up to like 50%, then ETH could be very sideways and boring for a short period of time. Remember, back here in the new year, when Bitcoin was moving from December all the way up to early January, Bitcoin did a lot better than ETH. It was actually outperforming all the altcoins, and that was because Bitcoin went up to 70% dominance. Right now, Bitcoin is sitting at a higher price, but a 40% dominance. Think about that. When Bitcoin was at 42,000, it had 70% dominance a year ago. Now it's at, 52,000, and it has a 40% dominance. So it's showing you this also has to deal with the amount of new altcoins that have been brought to the market. Like when Bitcoin was trading last year around early January, there was substantially less altcoins. Now there are so many altcoins. So it dilutes the market. It dilutes the dominance is what I'm trying to say. So just consider that. But bullish continuation, I would suspect moving up into the 44,000 area. That would be a little bit of resistance just because it's the prior highs and it's the golden pocket. For downside, it would be the 236 fib. So coming back down to 3,880 would be par for the course. If we start breaking daily candles below this trend line, which is a key trend line, that's when I would anticipate a swipe down into that 3,300 area, which would be in alignment with the 618. That is the bottom of the golden pocket, very textbook area, and that would still be healthy for continuation of a bull run because we have our higher lows at 3,360. Perfectly normal. Now, if Ethereum starts breaking below 2,700, that's where you would start to get worried, but we're far away from that. So let's go to XRP and okay, beautiful. So I'm going to delete this. All right, so we have all-time high here, rejection at this trend line, another rejection, bull trap, and then we've yet to backtest this trend line. So the best way that I would look at this analysis from now on is the next resistance we're probably going to get is around this trend line, and if we could finally break this trend line with like a weekly close and start getting above there, I would still be bearish. Why? Because we have yet to break these highs. So you can still see, even though we broke this trend line right here, we did get a rejection at 135, and here we were at 140. So I'm not really super bullish on XRP for continuation until we get above 140, and we're a ways away. Now, have we bottomed? We're looking pretty damn good. The reason why we're starting to see these EMAs crossing, we've started to see an exuberant buyback, a nice back test, by the way, a couple days ago. This looked bad to people, but I thought it looked great because we just back tested a technical level of the 21 exponential. Then we held the 21 exponential, got above the 34 today, and now we're seeing this 13 EMA. If I go like this, you can see the blue is crossing above the orange. Now, if this blue exponential moving average crosses above that 34, then that's really solid. So think about that. Like, we're starting the reversal stage for XRP. And because we've yet to have a huge shift in dominance for XRP, it's looking good. It's coiling up. And that's a good thing. Now, you can see the rejection for XRP the other day was exactly at the 55 simple moving average, which is just what I taught you guys about with Bitcoin. And we're seeing this is still sloping down. So with the 55 sloping down, that's bearish. We want to see all moving averages sloping to the upside. And these 200 moving averages, the 200 exponential, 200 simple, are definitely going to be a resistance. So until we could break and close dailies above $1, we're just trading sideways and we're building a base. And building a base structure is good. This also looks like a clear cup and handle. And now we could analyze that in a couple ways. I would analyze this off of these levels right here, something like that. So you can see these are the daily closes that I'm considering with this trend line. That's how I like to do my trend lines. And if we are going to get a back test of that level, that would still be fine. And then we could consider having some sort of down-sloping resistance line like this. And a break of that would be good. But yeah, it's this trend line that's really going to be a bitch. It has been for a while now. So with that being said, this is something to consider. Holding these levels here of around 89.90 cents would be key. Once we start closing a daily below this 89, let's just call it 91 cents. If XRP closes a daily below 91 cents, I would anticipate it to swipe down into the mid 80s. And that would be in concordance with Bitcoin trading below to the 48, 47K range again. Until then, this is looking pretty healthy, and we have the clear level is $1. That's a psychological resistance level for XRP, so that's the level that it needs to hold. And we've seen historically XRP has a very, very good January. So let's just see how this plays out, because as we transition into the new year, we could see a nice breakout for XRP. I'm not saying it's going to do the crazy melt your face off breakout, but what I can say is typically after we have these big consolidation moves, we tend to have a structure like this. And look at this. We had this cascading event to the downside, a quick little buyback followed by a downtrend, and this actually resolved in a much bigger move. So even if you see here, we have dump, that little move right here would be similar to this move right here, and then a downtrend which just confirmed this area as a support. So imagine downtrend, that would make like some weird cup and handle formation, and then just bounce, boom. And off of those levels right there, if you gave it an additional 77 days, it was about 700%. Of course, 700% in 77 days. Gotta love the numbers. But this was the time frame of 2017. You can see right here, flipped to around December, and then it went up in a straight line until early January 4th. Now, why is that not weird? Because January 4th is the 4-1 or 1-4 date numerology, and 1-4 comes back to XRP in Gematria. 14 and 15 is a very powerful number for XRP. It was also funny how on most exchanges it ended at 33 at 3.3 $3.30. You gotta love that. Obviously it's all about transmutation and the Freemasons. So this is completely fine. It is a huge triangle formation we're building. Like, this is an official massive symmetrical triangle that we have going on that is formed, and it's noticeable now, and this should be coming to a conclusion very soon, because typically, let's just say this is our apex right here. We have a 75% breakout likelihood on apex, so it would probably be somewhere around mid-January. We should get some resolution on this. Now, we don't need to follow these patterns 100%, but it's pretty noticeable. I mean, it's pretty noticeable how this trend line has been playing out. You could see right here, after the SEC dump, we got rejected off of it. Then after we broke out, we overextended, back tested it, and then continued. All right. If you were to continue this trend line going back, I'm sure you're going to see how important it really was. You know, it's pretty much showing you all the levels to consider. Broke through it, came up, back tested it. Broke through it, rejection, came up, back tested it. Broke through it, came up, rejection, back tested it, boom, back tested it, boom. It's over and over again. So this trend line is key, and I'm on logarithmic, by the way. Now that tells me that if we're coiling up towards this apex, definitely get ready for a move. And I don't like taking measured moves off of logarithmic, so bear with me on this. Like I said, I don't like taking measured moves off of log. But if we were just conservative and we took from these highs down to these lows and did something like that, and then put it somewhere over here, just for fun, you know, we're looking at pretty much back at like 230. Okay, and that wouldn't be completely weird. That would be somewhere around the prior resistance highs that we had during the blow off top. So you can see that right here, around 230, we wicked up to here, got rejected, and then here we tried holding it as support during the blow off top stage, and then right when we broke down through it and got the rejection on January 9th, that was when it came to the downside. So, you know, this would be a key level right here, somewhere around 240 to 270, and that makes total sense. 2.4 and 2.7. Why? Because X is the 24th letter, and this 27 comes back to Jupiter and Chaldean. all right? And Jupiter, 27 Chaldean, is Ripple, 27 Chaldean. So is that weird? No, it's all Gematria, guys. Okay, so this level of 240 to 270 would be the clear upside targets for XRP. And given that we're moving into the 22 year, I wouldn't be surprised if we hit the $2.20 price at a particular day. You know, that would be the way that I would anticipate it. So anyways, I know this was a longer video. I wanted to give you guys as much value as you can. I'm going to be, taking a couple days off to see how this all plays out as we move into the end of the year. Remember, I do have that holiday sale going on my course at watersabovecrypto.com/redpill2021. It's about 20% off, and it will be live until the first day of the new year to celebrate 2022. It's been a beautiful year with everyone. I believe I started my channel pretty much back in March, so I'm really excited to have the rest of 2022 with you guys. I mean, it's like we're just getting started here. We've built this channel up so big in such a short time. I am really super grateful for everyone. I will be making a new video before the end of this year, but I just wanted to let you guys know all of my sentiments before that next video comes out, because we have quite an important finish off for our stock market this year. And also the yearly candle that I showed you on Bitcoin is looking incredible for continuation. So we're bullish for now until we see anything below 40K for Bitcoin. And if we're bullish on Bitcoin, that means we're bullish on altcoins, bullish on the market as a whole. The regular market's looking good. So I just wanted to get everyone calm and prepared for how the rest of this year is going to play out. Appreciate every single one of you. Have a great rest of your day. Much love.